Hello, James King here at ForexGridMaster.com. I'm Canadian, living in Canada. This is my photo. I've been developing ForexGridMaster since 2005. Today is January 1st, 2015, and I want to talk to you about new settings in FGM Express and Advanced. FGM Express was released September 12, 2014. FGM Advanced was released December 16, 2014. Now, in my previous YouTube video for FGM Express, I introduced to you these two settings, chart equity and normalization. Now, in this video, I want to focus on spike protection. Here we are introducing two new settings in both FGM Advanced and FGM Express called max order period and max order frequency. While we're still here, FGM Express is trading a demonstration account which is $25,000 real money. This is the graph here. It's verified by MyFX book. I'll take you to my FX book and explain a bit further. You can see here the track record is verified and the trading privileges are verified. Over here, the gain so far has been 12.23%. The max equity drawdown has been 5.76%, so very small. Now, the monthly and daily averages are smaller than what they actually are, and the reason for that is we made the deposit October 14th, but we didn't start trading it until October 28th. So those averages are derived from the trading starting October 14th, but that's not exactly correct. Anyway, very reasonable, even if it is only 4.43% per month. This is an older default strategy for FGM Express. We now have a new default strategy for FGM Express and FGM Advanced. And the reason for that is because of the two new settings, max order period and max order frequency, both of which give us spike protection, and good spike protection, as you will see. Okay, let's switch over to the MT4 trading platform. Here we are. Now, I already have it set up ready to go. There's FGM Express, the expert advisor. The symbol is Aussie New Zealand, and we're using the every tick model. We're going to start January 1st, 2013, and the reason for that is I've already gone through the last couple years looking for where the most spikes are. In the first few months of 2013 is where most of the spikes are, so it'll be a good demonstration. We're trading the M1 period, of course, and I say of course because that's the only one that works for ForexGridMaster that gives the most accuracy. Now, spread is set at 30 points. The average at IC markets for the Aussie New Zealand is usually around 1.4, 1.5 pips. The commission is 0.7 pips, so that adds up to about 2.2 pips. So we're giving it a buffer here of 0.8 pips. So that's being generous. In other words, if we actually set that at 25 points, we would do better, but I'm not going to do that. Now, I think I'll make an adjustment here. Let's go in here and we'll set, instead of the account currency being 100,000, we're going to set it at 25,000. So back here, the account is 25,000. So it matches chart equity. So I demonstrated well the advantage of $100,000 account currency trading with chart equity of 25,000 in the previous video at YouTube channel. So if you want to review that, please do. I think what I'm going to do is I'm going to double the lot size here just to make it a bit more exciting. So the lot size is 0.015 in the default strategy. This is the new default strategy, by the way, that we're going to release here in a couple days. So I'm going to make that 0.03, which effectively doubles the lot size. So we have to go down here and change it here. 0.03. There, lot size doubled. You can see the other settings here. Grid spacing 5. Take profit pips 21. There's max order period 990 seconds, which divided by 60 seconds gives you 16.5 minutes. Max order frequency is 3, which means only 3 trades can be opened within the 990 seconds. And that's what gives you the spike protection, and we'll be demonstrating that shortly. Grid spacing step 0.05 pips. Lot size increase percent from one trade order to the next going out from grid center is 16.2%. Here we have CloseRun profit percent before trail stop is 0.3% and trail stop 0.0001. So it's a very small trail stop. The idea here being to get extra profit on spikes that trigger a close run. Instead of having the close run close in the middle of a spike, why not close it at the top of the spike or the bottom of the spike when you have more profit? Alright, we're good to go. Click OK. Let me see here. I'm going to start it out slowly because we have a spike right on the first day, if I recall. Okay, visual mode clicked. We're all set to go. Start. Okay, I'm going to pause it, increase that, delete the grid pattern so we can see it better. Chart, I happen to like candlesticks better, so I'm going to put that in there. We don't need that, and we don't need that, so we have a fuller screen. Okay, so here we go. So starting to trade. You can see our initial setup. We have a buy limit here, a sell limit. Sell limit just opened. So we have limits above, limits below. It's a counter trend strategy. Price goes up, it opens sells. Price goes down, it opens buys. Alright, I'm going to speed it up here just a little bit till, whoop, there's the spike. I caught it perfectly. Now what's happened here, if you look at these blue check marks, those are the 3 trade orders that are allowed open within the 990 seconds or 16.5 minutes. So there's the one check mark marking a buy opened here. Over here you see it. This is a second one opened here, and you can hardly see the check mark, but it's in the back there. So we have 1, 2, 3 buys opened. Okay, so no more trades open. So price goes way down here. No trades open. So if we had trades opening, normally there probably would have been, let's see, 1, 2, 3, 4, 5, 6. There would have been about 8 or 9 more trades open. And as the lot size increases, you can see that normally there would have been accumulating negative trades here. Now presently the max equity drawdown is only 0.92%. So that would have been quite a bit higher had trades been opened there. But because of our new spike protection, those trades weren't opened. Alright, I'm going to slow it up a bit here. There we go. and we're going to continue. All right, so if you count, you'll find each of these bars are 1 minute bars. So if you count, you'll find, boom, 16.5 minutes went by, and then it allowed another buy to open. So there we go, we're back in action. And you can see the gap here. Now you can see the lots, let me pause this. You can see the lot size here is 0.22, 0.26, 0.30, and 0.34. So the lot size increase is going by grid slot position. In other words, we've skipped a bunch of grid slots, but the trade size increases per grid slot. Now the advantage of this is now we're quite weighted with buy trades here. We've got 1, 2, 3 buys open. If you add them up, it's 0.3 plus 0.26 is 0.56 plus 0.22 is 0.78. So we have 0.78 of a lot open here. Now if you add up the starting trades, it's 0.048, 0.13, 0.19, 0.22, 0.3, 0.39. So you can see it's already quite a bit outweighted. So that means we don't need much of a retracement to get a close run. So not only is the spike protection keeping you from having too many accumulated open negative trades, it's also enabling you to get a close run much faster on a smaller retracement. And because it's happening faster, you're going to get more close runs, so you're going to get more profit overall at less max equity drawdown. All right, here we go. We're already in profit. If you look here, you'll see 0.11%, another 0.2%, and we'll get our close run. And drawdown overall is now up to 1.01%, which is very reasonable, of course. There's a little bit more spike protection because we have 1, 2, 3 trades open there. So if price took off down here, we would have had even more spike protection. There's our close run. So it didn't have to go back very far to get the close run. If you look here, you'll see close run 1, trail stop percent. We've captured $77 in profit, and we had 11 buys open when we got the close run. You can see the blue lines here. The blue are the buys. And it also shows you here the run equity maximum and the run equity minimum. All right, margin wise, you can see the minimum margin level so far is 12,537%. So almost no risk whatsoever. All right, let's continue. Now I'm going to speed this up because we don't have another spike, I think, for about a week. Let me see, January 25th. Okay, so I'm going to speed this up. Actually, we don't even need that. I'll use the pause button. January 17th actually is the next spike. So I'm going to keep an eye on that as this goes fast. Those yellow vertical lines are representing positive close runs that we're getting. Each close run captures 0.3%. If you double click the price scale here, it gives you the full size. if you drag it down, you can contract it so you can see the whole grid range. Okay, I'll stop it here just to show you. Look at the trade sizes here. There's the upper part of the grid, sell limit 0.04, and then the bottom part are the buys. There's 0.04, and you can see how they're increasing by 16.2%. Now the first increase is not enough to round it off at a higher trade size, so you have 0.04 again, and then 0.05, 0.06, 0.07, 0.08, 0.09, 0.11, 0.12, 0.14. So we're getting more and more weight as the grid stretches out further, because the more it stretches out further, the more apt it is to retrace, and that's the beauty of the counter trend strategy. Okay, here we go. We got our close run. Where are we? January 15th. Okay. Now look at the stats. We've gone 2 weeks. We're up 3.99%. Max equity drawdown has been 9.12%. Okay, we're coming up close to a spike, so I'm going to slow this up a little bit. 31 is good. Okay. That's not the spike we're looking for. Actually, it is. It's all kind of squished together, so it was a little hard to tell. Okay, I'll keep moving. Speed it up. Next spike is going to be January 25th. January 25th, 1658. So I'm going to be a little careful here. Here we are. Now what's important here is the spike protection only protects you against negative trades. In other words, any trades open that are in the positive and in the direction of the spike, those trades are allowed to be open and close when their profit targets are hit. So there's no interference with what's positive. Okay, we're close to another spike, so I'm going to open up that and slow it up a notch, and then we'll go forward. We've got another 16 or 17 seconds to go before the spike. Okay, we're presently up 7.48%, 23 runs. Now if you multiply 23 by the close run profit percent before trail stop 0.3, you're going to get 6.9%. So we're at 7.48% profit. So that shows you a bit of how the compounding works. Some of that might be gained by the trail stop as well. We're still at a max equity floating drawdown of 9.12%. Okay, I think we're going to get our spike now. There's our spike. No trades are opening because we already have 1, 2, 3 buys open. So this is a very good example of the spike protection that's happening. So soon we'll have 16.5 minutes go by, or 16 bars, 17 bars I guess, 16.5. And it will enable more buys to open. There we are. Okay, I'm going to speed this up. I wasn't watching. Okay, there we go. Let's have a look at what all's happened here, if we can see it. There's a gap there, but that's okay. Everything happens so fast, sometimes it's a little tricky to see. So let's just go back here, and our next one would be February the 1st. Where are we? January 31st, so February the 1st, 1656. Okay, let's go. Okay, we're about to have a spike, so I'm going to slow it up. Get that out of the way, compress it so we can see the whole grid. Okay, presently if you look at this grid, we're at minus 3.44% on this run. We still have a max equity drawdown of 9.12% in all of the trading. We're presently up 7.77%, 24 runs. If you multiply 24 by 0.3, you get 7.2. So we're ahead of that. Our minimum margin level has been 1,762%. So still lots of margin there. By the way, the leverage on the account is 1 to 500. Grid trading needs higher leverage, which gives you the advantage of better profit and more flexibility. Of course, it's a bit more dangerous if you don't know what you're doing, but you should know what you're doing if you're trading real money. Now you can see the lot sizes here and how they're increasing. We have main grid buys. We have 21 buys open. And lot size has gotten up as far as 1.42. Now if you look at the very beginning, the first lot size is 0.04. So you can see how much lot size has increased over 21 buys. Now there is a gap there, so there was some spike protection. So 1, 2, 3 trades weren't opened. So that helped us out a little bit. And we're going to have another spike here shortly. So let's tone it down to 31. That's okay. Here we go. Make it bigger so we can see it. There we go. That was a gap down. Hit the pause button so we can take a look at it. Actually, I don't see any spike protection there. If you look, you see 1.05. That's even. There's no gaps there, so there is no spike protection there. I made a mistake. Just because I saw the gap made me think it was a spike protection. All right, we've increased our max equity drawdown now to 11.8%, and we now have 23 buys open. All right, so I'm going to speed this up. Here we go. There, we got our close run. Another close run. February the 14th, I think, is the next major spike. There's probably a few along the way, but let's take a look. Another close run. Okay, here we are with 20 buys open, and we're at minus 4%. Max equity drawdown 12.7. Okay. You can see it didn't take that much retracement. Again, because the lot size is increasing, it gives more and more weight at the outer edge of the grid, so it doesn't need as much retracement to make up for all the previous trades that were opened. We're still at a max floating equity drawdown of 12.7%. We're now at 12.5% profit, 30 runs, so there we probably gained on a good spike using the trailing stop, because if you multiply 0.3 by 30, then it's 9%, and here we are with 12.5%. So we have both compounding and extra profit made by the trailing stop. All right, we're on February 12th, so we're close to 6 weeks in. Here we go. Okay, we missed a couple spikes there. February 19th, 21.31. All right. Okay, here we have a spike here, and you can see these 3 red check marks indicating 3 sell trades open, but no more opening because we've reached our maximum, and 16.5 minutes has not gone by yet. So let's see what happens. All right, so we have this section here where no sells were open because of the spike protection. So we can guess here, I think probably 1, 2, 3, 4, 5. We've been spared the opening of 6 trades, which would have been in the negative. Okay, where are we at? We're still at a max floating equity drawdown of 12.7%. We have 14.57% profit over 36 runs, and presently within this run we're only at minus 0.55%. Okay, let's continue. There. Let's take a look at this close run. Okay, this is the best way, I think. Now, all these red lines here were the cells at the bottom of the grid that got closed out with losses, but the trades at the top of the grid, which you can see these ones where the lines slant downwards, outweighed the negative ones by enough to trigger the close run. And you can see there close run 37, trail stop percent, and profit capture was $91. You could see 14 cells were closed. Run equity maximum, okay, let's get it back. Run equity maximum was 28,738 and the minimum 27,181. So everything in good balance. We still have a max equity drawdown of 12.7%, and our minimum margin level is 1,252%, which is all kinds of margin. So let's continue. I'm sure you've seen enough to understand how the spike protection works. I'm just going to go longer here. I don't know when I'm going to stop. I don't want to take up too much time. Where are we? February. I'll probably run it 3 or 4 months and then stop, because this is taking quite a bit of time. But you might want to get off here, because I don't think you're going to learn anything new here from here on. I'll just be showing you some more spike protection examples. There's a great example, actually. And the reason why I say it's so great Okay, so here's the start of the run here. You can see the first thing that happened was a buy open here, and then another buy, and then another buy, and those got closed as price kept going up. And then price was opening all these cells. You can see these red lines slanting upwards. So those are cells that are being opened. And one of them did retrace 21 pips, so that cell there closed out in profit. So you can see the grid is stretching upwards, more and more upwards, and there was a spike upwards. Now we're in a new run, so these cells here are part of the new run. But you can see there's no lines there, so there was spike protection in that spot there. And this was the period of 16.5 minutes, and then it allowed cells to open. So as price is retracing, it was opening these cells. And it actually retraced enough to close those cells, but not get a close run quite yet. So. And then price went up yet again, a little higher. And then we have retracement, and this time we got the close run. Actually another spike, and then we got the close run. We're still at 12.7% max equity drawdown. Profit 17.49%. We've gone almost 2 months, so that's quite reasonable. 42 runs, minimum margin level 1,252%. Like I said, at this point you may have learned enough. Maybe I can add more details as we go. Down here bottom right you can see 1 New Zealand dollar equals 0.82 USD dollars. So this is part of the normalization process, because the reality of it is the New Zealand and American dollar and Aussie dollar, all of the values are changing, and you have to take all three of them into consideration, not just the Aussie and New Zealand. This is something that MetaQuotes has not done. In fact, nobody has done it but us. Alright, let's pause this and see what's going on here. Alright, max equity drawdown still at 12.7%. We have 24 cells open and the run is presently at -7%, so that's definitely being stretched. And you can see the first trade orders at 0.04 lot size, and here we are at 1.86 lot size. So lot size has increased a lot, and that's why we're at -7%. But we have the elastic effect, and it's bound to be retracing soon. And because the lot size is so high there, you didn't need much retracement to get the close run, and then close all the negative trades below, but with a net profit. And you can see the net profit here. It captured $92 net profit. This is the one thing about Forex. What do we got going on here? Okay, it only took a bit of retracement to get the close run, and there's spike protection in there. A new run opened. 3 cells, you can see the red check marks there, were opened, and then no more cells were opened. Spike protection. And then after 16.5 minutes, more cells are being opened here. But we're only at 0.32% down on this run, which happens to be run 59. All right. Ooh, big spike there. All right, so now we actually have 18 cells open. We're at -9% because price has gone up a long ways. But we've been protected twice within this same run in the same direction. You can see here there's probably 1, 2, 3, 4, 5, 6, probably 6 or 7 cells were not opened because of the cell protection. So you can see the lot size. If we had had 6 trades open between 0.9 and a lot size of 2, we would be close to maybe margining out even. Who knows? Okay, I'm not going to calculate that at the moment. Let's just keep it going. Ooh, up more. Okay, so we have a new max equity floating drawdown of 18.62%. and we're presently at -12%. So at the peak of that, it reached 18 right there probably. All right, and we have 21 cells open. All right, so it must be due for a retracement. There we go. Ooh, price is getting very volatile now. As I've said many times, the most obvious thing about the Forex market is price is always going up and down. Even when it's trending in one direction, it's still going up and down within the trend. And that's what grid trading is targeting. And over these many years, we've developed many settings to make that work well. That was another spike protection back there. This area here, there were no trades open. There you go, you can see 3 buys were open, but then there were none opened here at all. The 16.5 minutes went by, and then buys are opening here. And there's our close run. Another close run. I'm pausing it because we've done 70 runs, which is easy to multiply by 0.3, which would mean 21%, but we're actually at 28% profits. So that's a combination of compounding from one close run to another, and also any extra money gained by the trailing stop. Presently have 12 buys open. We're at minus 0.49%. So we've gone January, February, March, we've gone 3 months. So we're averaging more than 9% a month. Our minimum chart equity is now less. It's at 738%, but that's still quite safe. Now remember, we changed the account equity of 100,000 to 25,000. So we're full out on the $25,000 in the account. If we had been trading 25,000 of a $100,000 account, the minimum margin level would have been maybe 4 times higher than that. So by working with chart equity and account currency, you can lessen your margin risk, which I demonstrated in the previous video on our YouTube channel. Yeah, this is taking quite a while. Every tick method is not super fast when you're doing it in visual mode. It'd be much faster if you actually stop the visual mode. But that only gives you the results. It doesn't enable you to see what's going on along the way. I'll go to the end of April, I think, and then stop there. Let me look at my notes, see if there's any major spikes after that. Well, there's a few more spikes, but I think the end of April will be enough. So I'll stop at the end of April. That'll be 4 months. So as price goes out from grid center, not only is the lot size increasing, but the grid spacing is also increasing by 0.05 pips. So it's only there's a cells. Okay, those, where are we here? Cells. Hard to distinguish what spike protection we got there. Let's keep going. Okay, there was spike protection here. We had, oh, those are the cells being closed out there. So we had spike protection here, and we didn't start opening buys until here. Oh, May 1st, far enough. Okay, so we've gone 4 months. We've closed 95 runs. We're up 38.31%. Max equity drawdown at 18.62%. So very reasonable results. Still quite conservative. Minimum margin level was 738%. So we did well. Let's actually see what that is per month. Back here, compounding. This is the calculator on the website. We want to calculate rate. The principal is 25,000. Input months was 4 months. Input total. So 34,590. Calculate. So we've averaged 8.45% per month compounding over those 4 months. Not bad. Now we can have some fun here. Just now that's a totally hands-off experience. Let's close that and go back to settings and open it up, and let's increase the lot size a lot and see what happens. So I'm just going to make it 0.1. Okay, so that's over 3 times what we had it set at before. Let's see how well spike protection will do for that. 0.1. I'll just run it for a little bit. We don't have to get too excited. Okay, 0.1. Okay, good to go. Here we go. Start. Okay, here we go. See, if you're an experienced trader and you're willing to watch while you're trading, you can make more money if you know what you're doing. Okay, so already the max equity drawdown is up to 22%. We've only gone a week and we're up 4.42%. Our minimum chart equity is down to 616%, however. I'm just going to go a month here. We've gone 2 weeks. This video's been long enough. So if you have any questions, please feel free to go to the website and on the contact form, ask whatever you need to ask. There, this shows you a little bit more of the potential of ForexGridMaster if you're willing to take more risk. January 29th, up 16.92%, 17.37. Bingo. Nope, not yet. We got another day. That month went pretty fast. We're up 18.55%. Let's run it another month. Ooh. Okay, now the max equity drawdown has gone up to 38%, which is still reasonable for a grid trader. As long as you have things in place to protect it from much higher drawdown. Now running at this slot size, it would be good to be only using like 25% of your account instead of 100%. Max equity drawdown is now up to 42%. So we are pushing it a bit. And you can see the reward for pushing it is quite dramatic. We're up 33%. There was some spike protection. You can see the gap in there. There is one advantage to a larger lot size, and it doesn't take as long to get a close run. So the quicker you're in and out, the safer you are. But of course that's not true across the board. The reality of it is the grid range can't stretch as far without getting into trouble. Okay, I'm going to stop there. March 1st, max equity drawdown 42.24%, and we're up 52.76% in 2 months. That's not so bad. Okay, I don't think I have anything else to tell you folks. Have a good year. Happy New Year. Bye.